right, Under Armour, it's up 2% today. Not a big move or anything, and not a lot of news, but we just thought it was a good time to reiterate that it looks like it's a bottom here. Now, of course, that's always tough, but the last quarter came out. We did a video report on it on July 30th, and we said, the quarter wasn't great, but it wasn't changing our overall hypothesis. And we were sticking with it despite the weakness on that quarter. And stock has actually continued to come down after the quarter, and we're just this looks like just a good entry point to us. So I think it's a good time to talk about it again. And it's up 2%, and relative to the market, it's actually one of the better performers of the day. Market is up a little bit, but not 2%. So one of the better performers. Good time to say, hey, let's take another look at Under Armour. And we also have the data now too, because at the time of the July 30th one, it had just come out. It hadn't hit our actual database, and now it is in there, so we can analyze it a bit deeper. So let's go ahead and do that. So first of all, I just did a little bit of a scenario. You see, looks like return on invested capital has bottomed out here. It's been 7% for a couple of years, and including the trailing 4 quarters, which is the light blue. Yes, I'm putting in a rise in return on invested capital to 12%. That's still lower than it was running at before. It's lower than Nike. It's lower than some other competitors. So I still think that's very reasonable. I put in a little bit of a fade, not sustaining 12% forever, that's for sure. And I still get a $21 value. I mean, we could do some scenario analysis and see how robust we go around, different ideas. Like let's just do one. Change the fade rate from 8% to 7%, so less of a fade, and that gets you extra $3. So you can see the sensitivity on that. And let's say it earns 10% in the long run instead of 8, and all of a sudden we're up to 30. I mean, it's a very plausible scenario. Okay, so yeah, I want to reiterate it. I also want to take a look at the financials specifically, because I think there's some interesting things we can glean by looking at it directly. And here we go. Okay, so as we said, revenue was a little light. It was only up 1.4%. Before the quarter came out, we were expecting a little bit more growth, but okay, 1.4. But they've done a nice job with their margins. Okay, so that was $31 million in EBITDA, and the same quarter last year was only $19 million in EBITDA. And this is on very little extra revenue. So it wasn't just because of the top line. It was more like getting efficient. And really, if you look back, let's say the March quarter to the March quarter, we also have $82 million EBITDA versus 54. Much better. The December quarter, $85 million EBITDA versus 44. So the September quarter, 181 versus 192. It's interesting that their big quarter is Q3 and not Q4, but I'm not really sure why that is the case. However, every quarter was better except for the September quarter, and only by margin. Only by a small margin was it a little bit lower. So overall, everything's intact. Okay, I am interested to see the Q3 September quarter, but I'm overall pretty pleased with what I'm seeing here. Bottoms it doesn't just come to a bottom and then come straight back up. There's a bit of a meandering, a little bouncing around, but overall everything's intact. So I just wanted to get that Under Armour, and shares have gone down since the press release as well. So looking for an entry, saw good action on it today, good valuation. Financials are still pretty strong, or turning, let's say, and that's our hypothesis for now. Thank you for watching our investment video. This is the same analysis we provide to our institutional clients. Want to improve your portfolio? Simply subscribe to our YouTube channel below, or better yet, go to our video website at video.fsavaluation.com and get access to the entire library.